XRP falls 4.3% even after XRPC ETF launch on Bitcoin weakness, finds buyers near $2.22. The market remains bearish with XRP struggling to break above the $2.23 to $2.24 resistance zone. XRP faced intense selling pressure at key support levels before a dramatic, high-volume V-shaped reversal signaled potential exhaustion of downward momentum. The decline unfolded against a backdrop of mixed institutional signals and heightened macro uncertainty. Crypto markets remain trapped in a medium-term downtrend, with sentiment pinned in the fear zone as volatility spikes across majors. Canary Capital's newly launched U.S. spot XRP ETF, XRPC, registered $58.6 million in first-day volume, far exceeding analyst expectations of $17 million. Yet the strong debut failed to stabilize XRP, as derivatives markets flashed stress signals. Roughly $28 million in XRP liquidations hit within 24 hours, with long positions accounting for nearly $25 million of the wipeout. Market analysts warn that institutional flows remain conflicted, ETF inflows show interest, but broader risk-off pressure continues suppressing crypto liquidity and momentum. XRP dropped 4.3% from $2.31 to $2.22 during the 24-hour session, ending November 16 at 2 o'clock Universal Time Coordinated. The decline carved a 10-cent range with a clear sequence of lower highs confirming bearish structure. The most aggressive selling hit at midnight UTC, when 74M XRP traded 69% above the 24-hour average, breaking the $2.24 support. Price slid to $2.22, marking the session low. 3 separate volume spikes above 57M during decline phases validated sustained distribution. Despite the ETF catalyst, the sell-off accelerated as price rejected $2.31 and failed to find support near prior consolidation zones. The pair settled into a tight $2.22 to $2.23 consolidation after the breakdown. Support/resistance. Volume profile. Chart structure. Momentum indicators. XRP sits at a tactical pivot after a dramatic washout. Primary support, $2.22, capitulation low, immediate resistance, $2.23 to $2.24 breakdown zone critical Fibonacci support, $2.16, 0.382 retracement. Loss of this level risks swift drop toward $2.02 to $1.88. Breakdown volume, 74M XRP, plus 69%, confirming capitulationTwo reversal phase spikes, 139, 146 4.7M each, signaling selling exhaustion recovery saw normalized but steady volume, consistent with bottom fishing interest. Overnight price hammered into support, printing a textbook V-shaped reversal higher lows formed at $2.209, $2.217, $2.227. Indicating momentum shift however, broader downtrend from $2.31 remains intact pending resistance reclaim failure to break $2.23 to $2.24 zone limits upside follow through. Intraday oversold conditions triggered reversal, but daily trend bias remains bearish 50D/200D structure slopes downward, adding overhead pressure. Holding $2.22 is crucial, failure exposes direct move toward $2.16. Then $2.02, $1.88A confirmed reclaim of $2.24, followed by $2.31, is needed to rebuild bullish structure. ETF flows will influence volatility. Follow early XRPC volume at U.S. market open. The V-shaped rebound provides short-term relief, but major resistance overhead limits immediate upside. A sustained break above $2.48 is required to shift trend bias back toward $2.60 plus targets.